Well, this corn market has been something to behold. Today, I'm Marlon Bowling with you and trying to keep tabs on what's going on in this grain market today. And Exhibit A is the corn futures. We had a little weakness in the beginning, but as we got into the session, we were about an hour or so into the trading session, and it just totally cratered. And now you have July corn at 620 and a quarter as we get closer to the end of the session. We are down 37 and a quarter cents, and remember, the limit nowadays is 40. So we're kind of knocking on that door here. It looks like we have been in that neighborhood of getting within a penny or so of hitting a limit move. Right now, December is down 24 cents at 516 and a quarter after a high last night of 543 and a quarter. Now, on the soybean trade with our quotes provided by bar chart, you have July down 19 cents at 1503 and three quarters. A lot of pressure here too, but it didn't start out that way. It was higher. November 21 and a half lower at 1340 and three quarters. Let's go to Ted Seifried of Zaner Ag Hedge in Chicago. From what I can gather, Ted, it sounded like this snowball got rolling downhill with a lot of technical selling today and a lot of talk about that head and shoulders formation on the corn. You hear people for it and against it, arguing it, but nonetheless, a lot of technical selling today.
I don't see the head and shoulders formation, by the way. But when we got through our new recent low in the July corn, that's when things really accelerated. And as you pointed out, we have touched limit down today. So, I mean, this has been quite a bit of pressure. Now, the idea that we've got better looking weather, we're moving along on planting. There's been a lot of talk about bigger acres. These are all been things that have been weighing on the market. We had put a weather premium into the market based on dry conditions, but that's been alleviated a bit over the past couple of weeks. And the longer term forecast looks better. So we're having to take that weather premium out of the market. But it is a very long growing season. We could very well have to put that back in here at some point. And as far as soybeans are concerned, I think the soybean market is feeling like, hey, we got left out of the acreage increases. And, maybe with the progress number that we saw yesterday afternoon, are we going to get much more or even get to the number there in soybeans? So soybeans really kind of acted like they wanted to rally earlier today, but the tremendous amount of pressure that we're seeing in the corn kind of pulled everything down. And you are doing some chart damage here at this point. So you have markets that technically look like they want to roll over to the downside as we get into the close. And that might follow through here for another couple days.
Interesting stuff. Now, on the wheat trade, we want to take a look here and see what's going on. We'll start with the Chicago wheat. I'll pull that one up here. And it's been kind of a wild ride here, too. Although it did come off of its earlier lows, we have July Chicago wheat down 8.5 cents. We're at 653 and three quarters per bushel. And if you look at Kansas City wheat, now, of course, we hear more and more talk about using some hard red winter wheat in some feed rations out in the Kansas Western feedlots in that area. July KC wheat down 12 at 603 and a quarter. It got as low as 597 and it bounced off of it just a little bit. Minneapolis spring wheat, we have July now down 3 3/4 cents at 681. That's where we stand right now. So we'll come back in a moment and we'll talk with Ted Seifried about our cattle and hog market activity and see how it's weathering the storm here amidst a lot of selling on a Tuesday. We'll be right back. Well, we're back with you talking with Ted Seifried of Zaner Ag Hedge in Chicago. And now let's look at our livestock trade. Ted, let's go to live cattle here first. And on the big board, we have turned mixed. We were higher earlier, but admittedly, very small gains. And now you have June live cattle down 17. Check that, now down 20 cents at 116.55. So that would put us $1.20 off our earlier high today. And now we're within 15 cents of our low of the day. August down 17 now at 119.92. Kind of hitting the skids, heading into the last half hour trade here. However, feeders are hanging right in there with the August up 207 now at 156.20. And that's within a dime of our high of the day. September 210 higher at 157.50. And, of course, lean hogs, we're making new highs again today. July is up 205 at 117.37. And even that is 60 cents off its earlier high today. So what's going on here? Why the divergence between the feeders and the live cattle?
Yeah, you think the live cattle are just taking a little bit of a breather here today. I mean, you look at the August live cattle with the $1.15 range for the entire day. That's really very tight. Overall, we like to say feeders are the leaders, and the strength in the feeders is coming from the weakness in corn, but feeders have gotten up and over some very key resistance areas. The feeder cattle chart actually looks really good all of a sudden. So hopefully that brings the live cattle market along with it. Very good box beef prices again, really fantastic packers margins. Hopefully they will start to pay up a little bit for cash, and that can lead the board higher as well. But I'm optimistic that there's upside potential. There's been a lot of noise in the last week or so about issues with the live cattle market and how packers are keeping prices at a certain point. And maybe we'll start to see them capitulate a little bit, maybe pay up a little bit, maybe they'll take some heat off of them. So that's the hope there. But I'm still looking for more upside potential there on the cattle.
All right, interesting stuff. And Ted, if you don't mind, we'll bring you back and we'll talk a little bit on the rural evening news tonight as well. And we'll see when the dust all settles what all actually took place today. Ted Seifried is with Zaner Ag Hedge. He's located in Chicago, of course. I want to touch on a couple of things also in these outside markets here we were talking about. The lumber market that has got so much interest here lately, and you know, it had made day after day after day moves to the upside with expanded limits. Then it sold off for nearly 2 weeks straight with expanded limits down. Then it rallied for 2 days with expanded limits higher. Yesterday was kind of an in-between day, so now we are down by the regular limit. This is not expanded limit. It's down $42 on the first 3 months. July is now at $13.97 per thousand board feet, down 42 bucks. So if it stays there, that means we'll have expanded limits once again tomorrow. And of course, the adventure continues in that lumber market. By the way, in case you're wondering, the Dow is currently down 21 points on the June futures at 34,331. Tammy, back to you.